Good morning. Welcome beyond the SEAF model. I'm Jack Kosar. This is effective for the week of May 25th, 2026. Let's get started. SEAF signals for this week. We retain technology and pick up energy and real estate. Energy coming in tops across the board with a 5 overall ranking. I'm going to kind of highlight why that's a little bit less important than normal in terms of its high ranking, but we'll get to that in just a second. Technology taking a little bit of a breather here on the trading week. Again, something kind of key to take a look at. We'll on a rainbow chart on why some of this data is a little bit misleading on this particular week. Overall here, seeing industrials here at the bottom and showing a little bit of life healthcare with that 2 on the trading week. This is the important chart for the week, the heat map. So what the heat map is showing here is a lot of assets flowing into energy, assets flowing out of technology, industrials, and assets flowing heavily into healthcare. The kind of misnomer here, though, is that on the trading week here, it's 0.11%. As if you've watched my videos enough, you'll hear that 0.4% is significant, and we're looking for something larger than 0.4 to really show that strength in terms of assets really rushing in. We're not necessarily seeing that right now. What we've seen over the last couple of weeks in this heat map is technology leading with very strong inflow numbers, 1% plus 1%, and really heavy accumulation. Now this heavy accumulation is actually what kept technology within that top 3, but outside of that, asset flows have been relatively light, and asset flows from either lightly positive to negative, but overall not seeing a lot of those flows coming in strong. Overall this week, not a big spread. The largest outflow is negative 0.26% coming from industrials, largest inflow 0.11%. So these numbers are a little bit skewed on the fact that we haven't had, outside of technology for the last month, have not had a lot of asset flows kind of breaking through to the other sectors. That's why we've seen a little bit of a rotation on that 2 and 3 mark in terms of, what was coming in at 2 or 3, again, with technology leading. So again, seeing some little bit of a rejigger in the overall table here, especially with energy and real estate coming up top here. But these are yellow. The reason they are yellow is because these are near zero overall. So again, not a lot of accumulation outside of what we see here in technology, which has been the story of the last month. 3 of 5 days last week were up in terms of the asset flows in the total sector spider, up for about 1% in total. We'll take a look at technology in just a second in terms of what's going on here. Is this a breather or is this a new trend? Taking a look at our total sector AUM, still trading near that all-time high of that let's call it 377, 375-ish billion dollars for the 11 sector spiders. Started to kind of make a little bit of a move toward that 21-day moving average and then have kind of rebounded a little bit. You can kind of see that wiggle in the S&P 500 chart as well. A couple of down days as assets were flowing out of the 11 sector spiders, and then a little bit of push up toward the end of that week. Again, and we saw that those as 3 consecutive up days in terms of assets flowing in from Wednesday, Thursday to Friday, obviously Monday being off. So, still showing some upward possibilities here on the sector spider total AUM chart. Highlighting our technology. So as I mentioned, we saw a little bit of an outflow, negative 0.08% on the trading week. That was good for 10th, which again, that's pretty light here. Seems like we're taking just a little bit of a breather as we've gone a bit sideways on the relative performance chart. Still headed in the right direction. Right now, it's looking like a breather for the S&P or for the technology after that really strong run up. We had something similar, not to the same extent, but something similar here about a month ago where we had a little bit of a sideways wiggle before the next move went up. Again, not predicting that this is going to shoot up again, but the relative performance indication is saying that this negative 0.08 on the week outflow was not significant enough to really drastically move the relative performance versus SPY. It is just, again, drifting a little bit sideways here. We'll see what happens next week. it'll be kind of key. If we can get another resurgence in technology, that could help push this next leg a lot higher. If we see another week of light to zero flows, we could drift sideways for a little bit. Technology has once it gets up to the top, has propensity to kind of start to drift a little bit. So we're not sure exactly where we're at yet here with technology, but taking a little bit of a breather, still a SEAF signal. Our next, we got energy here. Energy shot up again on relatively weak flows, but those flows kind of carried over through. It got us up into that mid or favored. I'd like to see some stronger numbers here. As you can see, we're still had a little bit of a spike up in the relative performance on just over the last, call it 2 weeks, give or take, but overall sideways for the last month or so. We had that big run up in oil prices that kind of generated both from Venezuela up through Iran, kind of generating a big relative outperformance move. We caught most of that, and then going a little bit sideways here from there. So we'll see. Like I said, I'd like to see a little bit stronger flows for energy to kind of start to build up some accumulation over the time periods. We obviously have strength here on the trading week on week flow numbers, but nothing that's strongly accumulating green here in the tactical month strategic quarter. So just keep an eye out. There's a chance that if any amount of money kind of runs out of here over the next couple of days, we could be back out of energy. But right now it's a SEAF signal. And again, we get a run of a couple of good weeks and this thing could be generating some nice relative outperformance. But as of right now, it's a little bit sideways, again, on weak flow numbers outside of technology for the last month. Real estate, similar situation, starting to kind of trend a little bit upwards in terms of its ranking. That's really just a consistency in real estate. It's never really blows the doors off, but it's never really down super on the avoid anyway. A little bit overall downtrend in the relative outperformance versus SPY, but the S&P 500, let's pull up this guy, has been pretty strong over the, going back since March. So kind of staying relatively level here with the real estate coming into this lower favored. Would need to see some stronger flows out of real estate. Oftentimes you go into real estate when other things are not as strong, but with the consistency and less jumpiness of this real estate, it's not a bad place to be. Industrials, wanted to just highlight the bottom here. This was probably our most extreme asset flow on the week, negative 0.26% outflow, 11 on that trading week, starting to kind of trend in that negative direction here. And we could see it in the relative underperformance versus SPY. Kind of been flirting here with between favored, neutral, and avoid here for the last month or so. Now we finally broke into that void, now into that middle to low point. Again, trending in that wrong direction with the 8 to 11. So that's a negative skew here for our tactical week, strategic quarter, and trading, or in a tactical month, strategic quarter, and trading week. So showing that little bit of underperformance here. Overall, like I said, it'll be interesting to see where the market takes it from here. A lot of these flows, as I've been mentioning over the last month, have really just strongly been going into technology. We get that little bit of a breather, and it caused a little bit of a reshuffle in the overall SEAF model. I would like to see some stronger flows next week to kind of solidify the next trends, but we will have to wait and see till next week. That is all I have for this week, and I look forward to breaking down the SEAF model with you all next week. Thank you.